Welcome to Bears in Exile. Today is May 3rd, and we're going to take a look at the Dow, the SPX, the VIX, and TNA for our nightly market overview. And here we are with the Dow, and the Dow is just absolutely crazy. It does not want to have a downtick. The bubble is very evident, but without a downtick, we have no concrete, definitive sign that this needs to have some sort of a correction at this moment. The secondaries are all very high and can continue to be so. Something to be aware of, not something to trade on. And we do have two indecision candles in a row. To me, they look like little twinkling stars, but I don't particularly like these. But until the chart says otherwise, this is still bullish, and with a great reservation, especially because of this bubble right here. And going into the faster time frames, you can just see that it went down some and it had an insane close where it just went right up and wiped out our little downtick that we had for a short period of time today. Now the SPX, here's where we get some interesting data. We did have a downtick on the SPX. Very good. Not very good because I want to be bearish, just very good because I like definitive signs. Definitive signs are great in my book, whether they're going up or whether they're going down. We obviously do have a bubble here to correct. Did it fix itself completely today with the range that it had? Possibly. By the book, though, a target would be right here about 1344-ish. So if it needs to do a complete bubble repair, that's the spot right there, and I'll be looking out for that. Just like the Dow, all the secondaries are very high, and typically it will reach that target in 3 to 4 bars. And once it gets there, it will have to decide what it's going to do with itself, whether it's going to cross over and test the bar, or if it's going to figure that that was enough and continue on its merry way up. In any case, a test of the breakout, the reverse head and shoulders breakout, is necessary at one point or another, and you'll see that that lines up right with our target also. So it could just be coming in to test it and bounce off, which would be more than fine, but that is what we're looking at. And the VIX today, we actually do have on the daily a crossover in progress of the short-term moving averages as it goes up to test the bar. Since this is an uptick, we can do the reverse on that and give it a target, but that target has already been exceeded, so the predictive nature of the uptick is worthless to us. This is still bearish overall, and it will still need to break this bar. If we do see it go up further tomorrow and have a complete crossover prior to entering the bar for a test, we know that it will put the hurt on the bar, and that would be around the 1760 area roundabout. All the secondaries are very low. One thing that I don't really like is, like yesterday, the Dow was an indecision candle, but we had a big green one here. I noted that in the video. We have the same thing here. It's not a solid green one like yesterday, but there is some green, and the Dow, was just an indecision candle. So either the Dow needs to come down or this does, and that's pretty much all there is to it. With the S&P looking the way that it does, I would give more weight to the Dow needing to come down rather than the VIX. And I've mentioned that the VIX looks like a piece of garbage, and it certainly does. But when the market, when the chart says something else, we do have to pay attention to it, no matter what our feelings are of an individual, chart. So there is the VIX, and in going into the faster time periods, we can already see that it has, this is the 60-minute. It's already broken through the bar, and the bar is trying to do a turnover, giving it more bullish power. But we will have to see tomorrow. We do have some bubbly stuff that has to fix itself. So whether it's going to come back and test the bar, break through the bar, bounce off the bar, remains to be seen. But that is the VIX in a nutshell. And TNA, representative of the Russell. We had our downtick yesterday, and I mentioned that we had a target to fix that bubble of, what was it? It was 89.27. I think I said something slightly different yesterday, but anyway, that was the number we were looking for. It was met and exceeded today. So this bubble has completely fixed itself, and now it is up to the chart to figure out whether it wants to do a flip and test the bar, or if it's going to go on its merry way. We'll know more tomorrow, obviously, but yeah, we have no predictive value left because that target has been met. And that's it for TNA. And if we look at the intraday, we can see that it already broke through the bar, has a bubble to deal with. It is on the 60-minute. Same thing on the 30-minute. And we are having to cross into a bearish long-term moving average on the 30-minute, and already have completion of a bearish crossover on the 15-minute, fixing the bubble, coming up for a possible test. So even though on the daily we can't tell what it's going to do, I think it's likely that it will come in for a test of the bar, and at that point we'll have to see if it wants to sit, or if it's actually going to test it and try to break through it. And if it does come in for a test, then we have a target right here at 84, and if it goes past 84, then we know that it is trying to make a breakthrough. So also something to be watching. As always, all investing decisions are your own. This video and chart are for entertainment, educational, and consumption of time purposes only. Stop by Bears in Exile, sign up for the forum, check out our articles, check out the news, and have a good time with us.